Good morning, investors and traders. This is Naim Aslam, Chief Market Analyst at Trade, and welcome to our daily technical analysis video. In today's segment, I'll be discussing sterling because it is selling. It is certainly on fire against the dollar and against the euro. So we'll have a deeper conversation why the price is moving higher and what is really triggering those higher price moves, and more importantly, if there's an opportunity. As always, it is important for me to go through this disclaimer and risk warnings. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, I'm going to bring out the MT4 platform and we will begin the conversation by looking at the weekly time frame first. On the weekly time frame, we can see that there is no doubt that sterling is way overbought because look at the RSI. The RSI is trading near 70, a level which is associated with overbought, and similarly 30 is a level which is associated with something what we call oversold. Last time RSI was near oversold was when the prices were trading near 1.16 or even actually below that. At the time, the RSI fell in around this particular price levels, and then ever since we've seen this massive rally, which pushed the RSI all the way to 70. Now, as you can see, for the last number of weeks, let's count them: 1, 2, 3, 4, 5, 6, 7. For the 7 consecutive weeks, we are seeing sterling posting higher highs against the dollar, and now more importantly, sterling is also about to pierce the upper line of the Bollinger Band, which confirms that the price has gone too far too fast and a reversal is due. So if the reversal does take place, the prices are likely to move towards the 1.34 or 1.35 price level. That is the prices that is the price analysis from a weekly time frame. So let's see what the price move is on the daily time frame perspective. Again, the daily time frame is also confirming very similar price action as well. It is showing that the prices have pierced pretty much the upper line of the Bollinger Band, and the price is likely to reverse towards its 20-day simple moving average, which is right over here, trading in around 1.38. So we are expecting a pullback of nearly 200 pips with respect to sterling. In addition to this, we also have three different other moving averages, where in pink you have your 50-day, and then followed by that is your 100, and finally your 200-day simple moving average. Again, the price is trading well above these moving averages, and the RSI is also confirming that there is no doubt that sterling is way overbought, and sterling is one of the currency against the dollar which you may not want to take a long position anymore, because this is a currency where you perhaps wanted to take a short position rather than a long position. So where are those important levels? Let me draw them on the chart. So this is our immediate support zone in terms of any pullback. And in terms of our resistance, the price is literally trading right there in terms of resistance, because I think this is where the price is going to really retrace. However, on the weekly time frame, we can draw our resistance. We can see that the resistance, the more likely is going to be just like at 1.43 price level, because this is the level where the prices saw a massive drop just back in 2014 after the double top was formed, and now the prices are moving towards that direction. So once again, on the daily time frame, we can draw our resistance levels between 1.41 to 1.43 is a little bit too high. We can just make it slightly bit more narrow. So on the daily time frame, we can say that our resistance level is going to be between 1.4263 to 1.4355. I know the resistance level is a little bit, it's quite big, but obviously it is something which is coming from a weekly time frame, So obviously it is going to be a little bit more bigger because of that reason. But in terms of our daily time frame, we can clearly see that our immediate support zone is really going to be between just in around these particular price levels. So we are just talking about 1.3. Let me just fine tune this one. So we can say 1.3787 to 1.3864. So that is the support level that we are really very much looking at. And under those circumstances, the price will kind of really retrace towards its, you know, these particular the 50-day simple moving average, sorry, the 20-day simple moving average. I can pull this one slightly bit more lower if I want to. I mean, we can just bring it just slightly right over here to 1.3850 to 1.3787. Now we are really targeting this consolidation zone, this area of consolidation. So overall, to summarize, sterling is way oversold. The bigger opportunity is to go short perhaps on this one. Going long may still had some room because the price can continue its journey towards this resistance level, but the trade which has more odds lined up in your favor is perhaps looking for a short trade. All right, that's all for now, and I'll see you guys next time.